Good morning, Ari. How are you today?
I'm wonderful. How are you?
I'm great. So this is my first conversation with the great, Sussman. He has built a junior mining company, a high-grade gold discovery in South America, sold it to a Chinese major for a big ticket dollar price, and he's doing it again with the same symbol on the TSX, CNL. So I want to learn a little bit about your background and how you got into the industry. So I know you're born in Canada, but you live in the US now. You've worked in Latin America quite a bit. So just tell us about yourself.
Well, let's start at the beginning. I never knew anything about mining, nor I had no plans to be in the mining space. My foray into mining started accidentally post-university. I actually started with a partner, a limited partnership convertible arbitrage fund. Okay, so I don't know if you know what that is, but it was this is in the early 1990s. We would go long convertible debentures, publicly listed ones, and based on the ratio to the equity, you would short in some proportion the underlying equity, and you could lock in at times very good spreads and yield very good returns doing that. As you
Mm,
probably know, as you know, convertibles, if the equity rises above the value of the convertible, the convertible rises in step with the equity, and it resists when equities collapse because it has to be paid out at par, or in theory should be paid out at par. And that was really well. And the way the fund was set up was 75% could do convertible arbitrage and 25% can do anything. Okay. And so I didn't understand anything about mining. In fact, when I went to university, it was geology was really frowned or laughed upon. I mean, they called the course, rocks for jocks, right? Meaning,
mm.
I mean, that is what it was. Like the scholarship athletes would take it because it was considered an easy
Really, it
line.
was that easy? It was
That's
that
well, I
easy?
don't know. I never took it, but that's what it was known as. So I didn't take it because I like the challenge. I'm not going to take geology because I like a challenge and I want to do the rocks for jocks course. And that was the way it was viewed. But if me or anyone had foresight back then, it was an obvious contrarian signal that was probably the thing one should have done, is focused on that industry because it was so out of favor that it was laughed at. But anyways,
Mhm.
long story short, I mentioned the fund starting to could do anything for 25% of the money. And as you know, and your viewers know, Canada is a resource rich focused country. So I started to learn about resources. And I remember my first PDAC conference, which I'm sure you've
So
been
what
to.
year was that?
I think it was 94, the first time I went.
Wow.
Okay, 19,
30 years ago.
30 years ago. There we go. 30 years ago. I didn't put it into context. And so it was at the Royal York Hotel, which I believe is called the
Yeah,
Fairmont Royal York. It was not at a convention center like it is right now.
right.
And I remember showing up to it in the afternoon, and I can't remember if it was a Monday or Tuesday, but one of the 2 days. And it was literally a bunch of very old people standing in front of a booth, and the booth consisted of a printout primarily of either a clay map or a geophysics interpretation map with pins, holding it up, right? With no money put into it whatsoever. And I would say, this is mind boggling, I would say 10 or 15% of the booth people that I met with were drunk, right? And I'm like, if this is, and they were old. I was very young at the time, but I was in my 20s, but the early 20s, but they were old. And I remember thinking, geez, maybe there's an opportunity here. And lo and behold, there was, and the Convert Fund made a lot of money on mining stocks in particular, more than oil and gas stocks. And look, I was not smart. I didn't understand it, but from about 1994 to 1997, you literally could have thrown darts, at the Vancouver Stock Exchange, which was the precursor to the TSX Venture, and you would have made money. I mean, it was unbelievable, and that was, I still think, the best cycle I've seen, because it was driven not by the commodity prices exploding, but by discoveries, right? So there was discovery fever, you know, in the Canadian market, and it got so frothy, culminating with Bre-X, which I'm sure your viewers know about, that it was like if you had a good trench, you know, without any drill holes, your stock would go up.
Trench.
Yeah, it would go up hundreds of percents on trenching, right? Like it got
Yeah.
a visual core, you know, sent stocks to the moon. You know, you may have heard of Cardaway Resources, right, which was near Diamond Fields, the big Robert Friedland nickel discovery. I mean, they announced visuals, which ended up being a dud, and the stock I think went to $20. You know, from pennies almost overnight. And I remember at that time, I was in Calgary, you know, pitching the fund. And you know, I'd meet with investment advisors, which were back then called stockbrokers. And the way the Calgary Canaccord office was set up was like a bullpen, right? Not like it is today with individual offices and compliance. I mean, they had everyone in a pit, basically, with little desks and some form of a crummy computer. It was actually a lot of printouts. And I remember that Cardaway when I was in there. One of the most, I think it was the most powerful broker or investment advisor said, "Wow, look at these visuals," and it was like frantic, you know, of everyone running to buy for their clients or for themselves, whatever it was, and they were the lead on that company Cardaway, which ended up being a moonshot that went to $20, then to nothing when the assays came out a couple of months later, I guess it was. So it was an amazing market, and then, you know, by 1990, late 97, 98, when Bre-X happened, and after post Bre-X and the market melted down, I thought I was smart, even though I wasn't at that time, and said, well, this must be a bottom. And I liked the industry, so I sold my portion of the fund to my then partner, and decided to be in mining on a full-time basis. And I didn't realize that the bear market would go from bad to worse to worse to worse to worse. You know,
So when did you sell your, you know, your
1998,
share in the convertible?
1998. And then it was
Okay.
just 99 was worse, 2000. And then I guess there was a bottom in 2001. I mean, that would be the
Yeah.
bottom, but it was only a bottom if you were buying producers, right? There was no bottom in the junior world, I would say,
The
until,
juniors didn't bottom until 2003.
yeah, exactly. That's when I remember there started to become action again, like, and people start to care. So
So you endured 5-year bear market.
5-year bear market, which just there was no interest. But I will say that bear market was still better than it was in the last 3 years, because people still cared. You know, you could still generate excitement. Now it's become much more difficult for a number of reasons, which I've talked about many times with many people. But you know, that was even easier than it is today.
Yeah. So that's very interesting. There's a lot of history there. So 94 is your first PDAC, bunch of old men, and quite a few drunks at booths talking about, you know, new discoveries and how great their projects are. Sounds very much like junior mining in Canada. There's still a bit of that around, although, you know, the faces have changed and maybe there's not quite as much alcohol at the booths during the day nowadays.
None.
But 94, so you had a couple good years. 94, 95, 96 were pretty good years for the mining industry, the gold mining sector. And then Bre-X comes along in 96. 97, everybody sells everything. It's a total wasteland. You go into a 5-year bear market, but then things start to come alive again in '03. The sector has a pretty good bull run from '03 to '07, and then we get the global financial crisis. So when did you get interested in South America and gold exploration in South America?
Formed my first South American focused company in 05 and went public in 06 in Brazil, which was a company called Colossus Minerals, which we took. I was the CEO. We took that to over $1 billion Canadian market cap, and then flashing forward a very short number of years, only to 2008. You know, Continental Gold was born, which went public in 2010. So I exited Colossus Minerals when it was about, I think, a $700 million market cap, and unfortunately got into enormous trouble post me with the new management team, which I was invariably blamed for, even though I wasn't involved. And because I couldn't run two companies, and I wanted to put the Continental Gold, which is Colombia, as you know, its assets into Colossus Minerals to have one company, but the vendor of them didn't want to do that. The vendor wanted it to be a only Colombian focused vehicle. And I, for 1 year, ran two companies. It was a very difficult year for me with my personal life. I mean, I almost blew my marriage. I didn't, not facetiously, but I wasn't home. I mean, I was on the road permanently, for a year, and said I can't do this. So I exited and focused fully on Colombia. And the reason for that choice is I'm really an explorationist by heart. And so the Continental Gold was in the early stage exploration phase, which I love. Colossus Minerals was at the early construction phase, and so exited and went to work on Continental Gold, which you mentioned. It took a decade, from when it went public, so it wasn't quick. Although in these days that seems to be kind of the going timeline.
Yeah.
Right. But it went
10
from
years is actually pretty good.
It went from, like a really early stage discovery, to a 11 million plus ounce global resource at high grades, and financed. We raised almost $1 billion, built a mine, and then when we were in ramp up, sold it to Zijin Mining, for about $2 billion Canadian total, and they for debt plus the equity, and it was a good ride with a lot of ups and downs. We had numerous very difficult challenges along the way to contend with, but we also had some great times, in doing this. And I think we put Colombia on the map, really as an international mining destination, and I think we're still doing that today. It still hasn't caught on. There's still this fear of Colombia. I hear political risk, and political risk, but I think that's totally unfounded, for a number of reasons, which we can get into if you'd like to.
Mm-hmm. So with Continental Gold, I mean, I obviously did follow the story for a number of years. I was a shareholder on and off a couple times towards the end. And then, so, I mean, it was a new discovery, a high grade gold discovery, over 10 grams per ton average grade, which is absolutely extraordinary. I mean, you don't get gold, deposits of that grade very often anymore in 2020, 2024. I mean, they just don't come along that often. And then, the scale you mentioned, it's multi-million ounces. It's now, I think, over 10 million ounces in total, gold and silver. So pretty exceptional. When did you know, hey, I've got something really special here, really exceptional?
So it's a vein system. Okay. So it took, I would say, 5 years of drilling and modeling to really understand that it wasn't just going to be big, but more importantly, it was going to be able to produce at a high velocity on an annual basis. I mean, the mine in 2023 produced at over 300,000 ounces on a gold equivalent basis, which is a good size mine now. And that took time. And it's a very large vein system with veins at different orientations to each other. And the key to that system, what took time to figure out is to find those joints where the veins at different orientations connect. And then you would get these broad, we called them broad mineralized zones. So very thick, intercepts in true width where you drill, we drill 50 meters at 60 grams and these kind of things. And that was the move. That was when the light bulb went off, that this wasn't going to just be a narrow vein mine. The problem with narrow vein mines is getting the material out. Right. So it wasn't going to be just 100,000 ounce a year producer. It could be something much bigger, and more special. And that's when we knew that we had a world-class system and that we had to advance it. And then and keep in mind, we were in a bear market. I mean, the junior market, which you mentioned started in 2004, it peaked sometime in 2012, right? The seniors peaked the year earlier. And so really we were in this phase where we were in a bear market for a long way. So we said, well, the best value is to go build the damn thing, right? Forget selling, because the bids weren't just going to be that attractive. And so we went and built it. We danced for a long time with Newmont. Newmont invested a lot of money into the company, in the neighborhood of $250 million in equity and convertible. But ultimately we ended up selling to Zijin Mining, because Newmont haphazardly went and decided to buy Goldcorp, in the last minute. And so that they asked us then if we minded waiting for them to consume that. And once I heard that, I said, well, that's going to take a long time. Well, guess what? By the way, today, here we are, and they're selling virtually the entire Goldcorp portfolio, right?
Yeah.
And so we started to dance, and Zijin was an excellent company to negotiate with. They want something, they're going to get it, and we were pleased with the outcome, and lucky, I think, too, because we closed the transaction, I think it was a week before COVID lockdowns started. I mean, it was at that PDAC that became known as the super spreader PDAC, right, in 2020. Remember that? And it was like, and so we closed a week later, and then bang, we were all in lockdown shortly thereafter. And the mine was built, it was in ramp up when we sold it. I believe it was about 80% ramped up, and Zijin had to stop the ramp up because of Colombian lockdowns. And so when you stop a ramp up, you go from whatever percentage you're at back to zero to re-ramp again. And they had to keep all the contractors and employees and whomever else financed, right? So we were lucky, because I don't know the number, I don't know the dollar amount that Zijin had to fork out, but I'm going to guess it was 100 million, over a few months to keep that thing afloat, waiting for Colombian lockdowns to subside and they could start the ramp up again.
So the timing of the finalized transaction, the sale, was very fortuitous for Continental Gold, because as a junior, if you had to go it alone and finance that care and maintenance period during COVID yourself, it would have been quite challenging, right?
Robert, we had, I think at that point, I mean, peak, we had about 5,000 people on site in the construction phase. So maybe at that point it was 3,500 or some number, but it was a big number. Remember, in LATAM, the cost per person is so much less than it is in, say, Canada or the United States. So you tend to overstaff, as an employment tool. And there's too much of the I only do one job and I can't multitask syndrome, but that's the way the mines are built. You don't build with 1,000 people like you would, say, in Canada, because costs are too high to have extra bodies.
Okay, so $2 billion takeover in 2020, and I mean, you basically did that whole ramp up period from the resource to feasibility study to starting to permitting to building a mine. You did that during a gold mining sector bear market, and you managed to transact at a $2 billion price tag, still in what we can probably call a bear market. I mean, I don't think March 2020 was a great time at all for pretty much anything. What was the key to this great outcome for Continental Gold shareholders?
You know how it goes. Great assets will always get financed in any market and will almost always trade or get sold. And so it just was world class in terms of its profile in both grade and potential throughput, and more importantly, exploration upside. I mean, that is the most overlooked component in a sale by many investors, is you get paid for upside, or good management team should be able to get paid for upside, right? So it was just, and Zijin, Zijin is now I don't know I haven't looked in the last 3 or 4 months, but 3 or 4 months ago was a larger mining company on market cap basis than Newmont.
Oh, wow, I didn't know that.
It was not then. It was on a huge growth curve. Now it's a behemoth. And so we found the right buyer, that was looking to grow. I mean, they've done, I think, 3 or 4 M&A transactions subsequent to that, and that's only 2020 when it closed, right? So, and the stars aligned, and it was the right timing. But you're right, we were in a bear market. I mean, the bear market, I don't think bottomed, which started in 2012 until for the juniors, I think maybe it bottomed in early July of this year, right? So it was 12 years with some big bounces. 2016, as you know, was robust for, I think it was at 9 months, 10 months, and there was a post-COVID enormous bounce. But
4 months,
yeah,
4 months.
those are bear. I look at those as bear market bounces only. Right now, I feel, from my experience, we're in the very early stages of a junior bull market. I know I say this, and most of the companies, if they're watching this, that that are micro caps, they don't agree with me because their equity prices haven't done anything yet, but they will come. I mean, it's just we're doing better. The higher quality group of explorers are doing better, but that's a very limited few. But that's how it starts, and then it trickles down. It's on its way. It's just going to take a bit of time. I think it's going not be, there's not going to be a heated blow off top for many years. So we're so early, you need some patience, but it's good times ahead.
Yeah, I mean, so I think the junior mining sector, at least, if we measure it by the venture in Canada, I think it bottomed in October, November 2023. I think it put in a higher low just this summer, like you mentioned, 3 or 4 months ago. But it certainly doesn't feel like a bull market yet. It's a very strange sector. It's a very strange environment. When I'm looking at gold at 26.30, 26.40 an ounce, I'm looking at some of the seniors trading very well and up, 100% in 2024, some of the better ones. But then others like Newmont are really not doing well and actually having a lot of operational cost challenges. And I, you said they're divesting some of their mines, some of their non-core assets that they acquired from Goldcorp, a decade ago. So there's a consolidation, there's a right sizing happening in the gold mining sector. I'm interested, like prior to getting into Continental Gold 2.0, I want to talk about what you think is wrong with the mining industry, the junior mining industry, and what has changed since 1994, 1995, as you talked about, when you first got into the game, what has changed for the worse and how can we make it better?
Okay, I can answer that in 2 parts. Okay. From the corporate perspective, I mean, the reason the commodity prices are so bullish is inadvertently, it wasn't a coordinated effort, but in the mid 1990s, the because of all the junior discoveries that were being made, the majors all sort of at the same time said to themselves, well, why are we exploring, right? We have this large cost center in our corporate structure. The juniors are making these discoveries and we're buying them. So let's stop the exploration and we'll feed our pipeline by acquisition. Okay, and it makes sense why that happened at the time because there were a lot of big significant discoveries that became mines. The 90s was the last decade of big discovery. We've had, if you look at copper, you look at gold, you look at silver. I mean, we don't find these deposits anymore that we used to find, right? And so that's what happened. But the problem with that was until that point, if you were a young geologist graduating from university and you said, I want to be an exploration geologist for my career, you had if you would get hired by a major, you had a very structured exploration environment to go into where you're taught how to explore. Majors own mines, in different parts of the world. You would get to fly to different projects. Geology, in my view, is not a science, even though we keep trying to make it one. It's an art form. The more art that one can see and study, the better you will be at recognizing it elsewhere. So it died. Okay, and we flash forward to today, right? Most of the exploration geologists that had that skill set have retired, passed away, or are near retirement age. And we've had this gap where we haven't educated young kids on how to explore. We try and do it, but we're an exception, not the norm. as a company, very few actually explore. So what are we left with? We're left with an industry that retreads projects that didn't work in 1970, didn't work in 1990, and are now rebranded as new project ABC today. And it's not going to work based on higher commodity prices. So that's the problem with the industry. So we're not generating enough discoveries to bring that excitement level back to it, where it's like biotech, where enough hit versus failures where it excites the general investor. That's one side of it. The other side of the coin has nothing to do with the mining industry itself. It has to do with the way the investment market has gone, and that's to passive investment. Right. And yes, that's a problem for all industries. In Canada in particular, it's much worse. You and I live in the US, there's still a huge spec market. Right. I mean, you see it every day. Technology, you announce NVIDIA's made a mediocre investment in you and your stock goes through the roof. Right. So there's this market. But we don't have many mining companies that are primary US listed to drive that spec money. And to couple the problem, it's become more difficult for Americans to buy stocks in Canada. You know that, right? I think you and I have even talked about this maybe, right? I mean, you look at the discount brokerage, right? You look at Vanguard, or Schwab, right? Which I think are the two largest. And if you want to buy Canada, you pretty much have to call the toll-free number, get someone on the phone and have them manually do it. And to get through takes 15 minutes and no one wants to do that. So
yeah, then there's another problem with certain brokers. If you're buying a stock under 50 cents, they charge you a penny a share still. So if you're buying a 15-cent stock, you're paying 7% of the total purchase price just to the broker to buy the stock. So that makes no sense.
Which is crazy.
Yeah.
And so this problem's compounded itself, but I think it's a pendulum that is going to have to swing back. I don't have a crystal ball to know what's going to cause the swing back, but it's going to come because we can't escape the fact that we need these metals, right? We need these metals badly, more badly today than ever. Whether you agree with an energy transition or not, most of the first world is hell-bent on making it happen in some way, shape, or form. So we're going to need a lot of metal to come out of the ground. And at some point, we're going to hit that crest where there's a panic. And you're going to see all sorts of money come into this space. I think we're at the inning one of it now, but I don't know when it's going to become a frenzy. I think it's got a bit of time still we're nowhere near a frenzy today. So it's a good time to be investing in the space. I am personally investing now in the space, and I haven't done so other than my own company in a long time. But I'm patient, right? I'm not expecting a micro cap penny stock or mining stock that I buy to go up tenfold or fivefold or even double, in the next year. I mean, I'm willing to sit and wait. I just look for companies that have tight share structures, good management teams. To me, tight share structure is the key, right? Too many companies need to roll their shares back because they don't have a good asset and they just are in financing penalty box, right? Indefinitely. But they exist. I mean, they do exist, and find them, and it's going to be some good times ahead, and good management teams tend to make things happen.
I feel like there's so many places I could take the conversation next because you just touched on a lot of key things. I want to say first that it's interesting what you said at the start of the conversation about in 94, 95, companies could put out results from trenching or grab samples or boulders in outcrop or whatever, and they could get a lot of sizzle. They could get a lot of action, in their shares. So that's a sign of a bull market. That's a sign of, investors have a risk appetite and they're seeking opportunities to take risk. For the last several years, the last, I don't know, 10 years, we've been basically at the opposite end of the pendulum in the exploration industry. So companies can put out grab samples or IP surveys, and it's just a big yawn. Nobody cares. Nobody cares about trenching. It's not going to move the needle, even if it's several grams gold over 100 meters. It's just not that impressive to most investors. You need core drilling results and you need high grade over big intervals. And then, even then, sometimes if it's not a new discovery, it's just not that interesting. So it's got to be high grade, it's got to be core drilling, it's got to be a new discovery, it's got to be something that opens up, the imagination. And that's really the only way we've seen it really work for junior mining companies in the last several years.
Welcome to how bear markets work. I mean, this is pretty standard. It's worse now than it's been just because there's a lack of the lack of interest out of Canada, in particular in the retail end and institutional end for that matter has been a huge problem. But it will turn, and I'm the strongest believer that the turn is going to come from here in the US. It's not going to be driven by the Canadian investor. It's going to be driven by those that have made all the money in technology and whatever these wild AI and whatever industry it might be. So it's going to come here because there's going to be an inflection point where those bubble markets, because they are bubbles, do not work. Right, and the money doesn't go away; it's just going to cycle somewhere else. So it's on its way to us. We just got to be a little bit more patient.
So I wanted to, so you took a year or two off, and then you came back.
Nope,
And
no. Let me stop you there. I took
okay.
exactly a month and a half off.
Oh,
I intended to take a year or two off, but COVID lockdowns negated that. That plus my wife telling me to get a job and get out of the house because I was driving her crazy. That's the truth. So that is how that's how it started very quickly. But we did intend to take time off. So it was no time off basically.
so how did Continental 2.0? So I say that because the stock symbol is the same, but it's a totally new company with a totally new set of
Yes.
projects. So can you just tell us the short story of how this came about and maybe catch us up to speed to where you guys are at now?
Yeah. So I think I mentioned, I always had an eye for exploration. And so that included having a small team of geologists whose only job was to scour Colombia for ideas. Let's first take Colombia. This is the equivalent in my mind of walking into, say, Peru in 1990. Okay, you've got incredible geology, a century history of mining with no modern exploration. And look at Peru today. I mean, it's one of the I think it's second largest silver producer in the world, maybe second largest copper, even if I'm not mistaken. I could be wrong. And one of the bigger gold ones. I think that's Colombia in 30 years from now. Okay, it's not tomorrow, but it's 30 years from now. And so we had to look for the ideas. The Colombian project owners, as they exist, don't come to PDAC with a binder saying, look, or a memory stick saying, check out my project, here it is, and it's packaged up in a way that can be evaluated. You got to go find it. So for a decade, we searched, okay, and we had ideas, and so Collective was formed on one of those ideas, of that we really liked, by more due diligence on it to look at other areas of it that you would care about, not just geology, but local government, etc. And we found our way next door to the very famous, Colombian famous Marmato mine, right? Marmato is our neighbor. It's owned by Ari Mining, but for those that don't know it, let me mention this, it's in full construction to become a large mine now, but what's interesting about it is its history. It's the second longest continuously producing mine in the Americas. It's been in production for much more than 500 years. Okay, and there's always been a saying in mining, the best place to find a mine is next to a mine.
Yeah.
I didn't invent that thinking, right? This is just how it happens, right? And so because it's Colombia, nobody with strong exploration skills had consolidated the ground around Marmato, thought about the geological model. What is Marmato and what is its relationship to what we have at our Guayabales project and our San Antonio project? And so we did this, right? And good geology, finds a way to be found, right? As long as you can fund it, operate properly, it's not easy in Colombia. I don't want to make people think it's a walk in the park. Colombia has a lot of population. So you're going to go mine. You want to build the mine, you're going to have communities you need to deal with. You need to do that very well. But we're in a wonderful situation where we're onto a very big mineralized system. Marmato is part of that system, but we think it's just a corner of it, and the bulk of it is sitting on our Guayabales project. So we're blessed, and it's been a pretty rapid journey, since discovery of the Apollo system, right? I mean, it's been pretty quick. It's only really 2022, and we're in 2024, so it hasn't been something that's taken.
Yeah, you made a new discovery in 2022 at Apollo. And your share price went on a powerful run from $2 to $7 a share over about a 6-month time period. So that was a new discovery. It got the attention of the market. It grabbed the imagination of the speculators in the sector. And also, you got a few institutions involved during that time. And since then, I've just been watching your results with awe the last couple of years. It's just one big hit after another big hit. I talked to other investors. They're like, yeah, those guys got the goods. Like, there's no doubt. So you basically have this a little bit different kind of porphyry, like several porphyries in a row, in a trend essentially, and you just keep finding more high grade gold over big intervals.
Let me give the best description of it. I think this is the best one. So it's all the environment here is the host rock are diorite. So those are porphyries, diorites, whether they're quartz, non-quartz, but they're diorites. But really, this is what, it's a fancy word, but this is what we would call a partially reduced intrusion related system. That is a very fancy term. We know what these we know, I think people know snowline very well, especially in Canada. So that's a fully reduced intrusion related gold system. What does that mean? That means that the intrusion, porphyry intrusion engine had its copper sucked right out of it completely, and you're left with a gold deposit, okay? In our case, we call it partially reduced because we've had some of it sucked out, but not all of it. So
What sucks it out? Is it just water?
No. It's just not literally sucking it out. Like, it's okay. So in the case here, Marmato Deeps is fully reduced. Okay, so it has no copper. The I don't know Marmato Deeps that well, but it's the same geology as us. It's the country rock, not the porphyry intrusions, not the diorite. The country rock is generally schist. Okay, and from the schist it can create pyrrhotite, which preg-robs copper and it takes it away. That's simple as that. So that's the environment here, right? I don't know what the snowline or what was the new one? Sitka. Sitka, another fully reduced. This is different than the BC, British Columbia, Alaska, Yukon reduced intrusion systems, although I'd say Marmato looks a lot like those. I think more of a better analogy, which your viewers won't be as familiar with, is in Australia. The Telfer mine, which Newmont just sold to Greatland Gold. Greatland Gold's asset, right, is a breccia like our brecciated porphyry like ours. I think it's called Winu, which is a Rio Tinto asset. That's like this, partially reduced intrusion system. But the thing about it is we've got the whole systems. They're intact, right? Snowline is a wonderful discovery. I think it's going to be one of the great mines of Canada, subject to the problems, as we all know, its location, etc. But it looks like so far it has limited vertical to it. I mean, it's kind of 400 meters and that's it, probably because the rest was eroded off into space at some point. In our case, we have the whole system intact. And what's amazing is we just announced at depth, really a new discovery, which we called ramp zone, the ramp zone, right? Which was really helped us finance, a month ago or so. And what did we find? We found an area that had more reduction to it than the whole upper part of the Apollo system. So this is Apollo at depth. We know this because the levels of bismuth and tellurium came way up. In fact, the rest of the system, we have no tellurium. Right, like, so that's an indicator of higher temperatures And we
You're getting
found
closer to the heat source there.
very hot. It got hotter, and what is the result? Much stronger gold grades, at least from 2 holes.
Yeah, so you hit over 50 meters of 8.2 grams per ton gold equivalent there. Is that right?
Right, and when you look at the including, right, the real reduced zone, it was about, I forget exactly, 18 meters at 20 grams, right? And then we looked back at, which is our deepest hole we've drilled, okay, by the way, and we looked back, we missed it, to be honest, but we looked back at the core from what was the deepest drill hole prior to this one, and we hit 15 point something meters at 20 grams in a similar setting. And by the way, the distance laterally between those 2 intercepts is about almost 500 meters, 0 holes in between, 0 holes on either side in other directions, etc. That's all we have so far in ramp, right? So now you come to Marmato, right? Marmato is almost 9 million ounces of measured, indicated, plus inferred under 43-101 standards, right? Plus millions mined historically. They really have 2 mines, Marmato Upper, which, and now they're building what they call Marmato Deeps. Well, guess what? Marmato Deeps is like this, fully reduced. Not ours is only partially reduced, but that's a fully reduced system. It is different than the upper mine. And guess what? The elevation, meters above sea level, that it happened at Ramp Zone and Marmato are almost identical to each other. Okay, so does that mean the rest of the project's going to see this change at that elevation? I don't know, maybe. But
So are you going to find out soon?
Yeah, so the follow-up drill hole to the ramp zone is on its way. We're about 200 meters away from entering the target area for the ramp zone target. So we should enter it, I don't know, in the next few days, right? We should start to see some action. So we're almost there. We're looking forward to it. We've had a couple of hiccups with the hole on the way, technical hiccups, nothing to do with anything else, just the drillers lost the rods down the hole. They had to back the hole up 200 meters and re-drill because they couldn't capture all the rods out, etc. Things happen, but we're on our way and we'll be there. And, I think January, we're going to have at least 2, maybe 3 assay results for holes, from ramp zone. Very exciting. The other thing that potentially is, I don't know if game changes very, but important for Apollo is we think we were always drilling it from the wrong direction, right? And you might say, well, are you stupid? Well, okay, it's because maybe we should have recognized it earlier. I don't know, but the system is brecciated, right? So it's a host is a brecciated diorite or a porphyry unit, and the brecciation makes it difficult to follow the structural trends, right? But we did eventually put a model together, and we were always drilling kind of from a southerly direction to a northerly direction. And we really should have been drilling from a northerly direction to a southerly direction. And so we've been testing this internal model, and obviously don't have assays, so I'm speculating from what we're seeing in core, but we're drilling at a perpendicular angle to the system now instead of along it. And at least visually, I can tell you the first hole to cut across the system at a good angle, which is, remember this one, it's 104 D1. D1 for directional, looks spectacular. I mean, we have areas, even massive sulfide, which is not this is not a massive sulfide type deposit, but we've hit so much sulfide that it's become massive, like up to 20%, over maybe 10 meters in one area. It looks spectacular. And obviously we need those assays, and we're drilling the follow-up hole now as we speak. I can tell you it looks great. I mean, it's
when you say sulfides, is that pyrite or chalcopyrite?
So all sulfides. So in our case, it's a combination of pyrite, chalcopyrite, sphalerite, and galena. Those are the
main ones. Zinc, lead, and copper.
Yeah, so that's right. So remember that we have different, so Apollo has different stages to it, okay? Stages are based on years the metal was dumped in, right? So stage 0, there was a porphyry there, okay, that then exploded, we think, right? And that's what caused the brecciation. The original porphyry, very low grade, okay? We think, we don't know, that then a telescoping porphyry came in, at least in the upper part, and dumped metal. That's responsible for virtually all the copper, and some of the gold and a little bit of the silver. And then that was then all over printed by the latest stage veins. Those are the porphyry veins that form last. Those are the ones that have the lead zinc in them. Okay, and so that's what, so we get the soup mix or the salad bowl mix of metals, and that's why we have high grade too. But you know, we had massive sulfide, which we have never hit before, at least anything more than 1 meter, right, over multi-meters. And I can tell you, we're drilling orthogonal to the system. This isn't down a vein. This is across structures at near true width. So pretty amazing. And obviously we need the assays because I could be blowing smoke, you know, out of my mouth, and I could be wrong because you know the risk, especially with precious metals, until you have an assay, you don't know. But given the history of this system, I'm going to bet that we're going to see something pretty special out of that hole.
Yeah, I mean, I think the odds are reasonably good, just knowing the location and this ore body. It seems to be pretty exceptional. So, to wrap it up, I feel like we could talk for several more hours, Ari, and maybe we'll speak again, in in a month or so, when you get those assays back. But for now, to put a bow tie on this conversation, I look at power, Apollo, trap, et cetera, et cetera. I look at the context of where this project is located. I look at the scale on some of these maps in your presentation. I look at the drill results, the body of work that you have here the last few years, and my mind goes to snowline type scale, 7 to 10 million ounces gold equivalent. Who knows? It might be a little smaller. It might be a little bigger. I'm not a mining engineer. That's just my experience of 20 years, in the sector. Ballpark what this could be. How much is that worth? How do you get the valuation of the company to that level? And what does the $46 million you have in the treasury get for shareholders?
So let's do it in reverse order. We're going to embark on our largest drilling campaign ever in 2025, subject to board approval, something like 60,000, maybe 65,000 meters, depending on how the productivity of the rigs. I think we need to drill about 100,000 more meters to get this to the point where we can start to package it up and decide whether we want to advance to build it or to sell it. Okay. Size of the system. This is Apollo alone is many millions of ounces on a gold equivalent basis. I don't think there's any question of that. What I will say is this: when you mentioned Snowline, Snowline's an incredible discovery. Unless they find something new, it's closed. It's closed in all directions, right? It's not open, right? It's been drilled off vertically and laterally. We know what the envelope is. Its only way of improving at this point without a new discovery is by getting better grade. Okay. In our case, we have just announced what could be a game-changing discovery at depth. When you start talking about 20-gram material over thick widths at depth, you can start to think about a mine that speculatively could produce big numbers on an annual basis, and our volumes open in all directions, including depth and laterally. So I think we're going to keep growing. Let's push it hard in 2025. That's going to be the plan that I'm proposing for the board to approve. And then we'll do resource estimate in the first half sometime of 2026, and go from there. So, and we have trap, we're going to test the X target for the first time. Trap is big too, right? It's just an earlier stage. So I think you're looking at, I don't know of a company with a gold dominant focus that has larger potential than this one listed in Canada. I do not know the Australian market, so I can't comment. We're open and we're going to grow and we're going to get bigger and bigger and bigger. That's clear from the drill holes you and I discussed even here.
So the current market cap is about 350 million in Canada. So about 250 million for us Americans. You sold a company previously for many multiples of that. What do you need to do to get from this valuation to potentially that valuation that you've already achieved?
Well, we need to advance the site planning. I have experience with 3 giant majors, okay, that were, in our underpants, so to speak, for a number of years at Continental Gold. Okay, so we need to advance what a mine's going to look like while we drill what the system's ultimately going to evolve to. And we're doing that in the background. Okay, so you need to deliver a project because it doesn't matter how much experience a major has. What they can bring is they can do far better resource estimation and mine planning than we'll ever be able to do. But they can't walk into a location and say, here's how you build the mine on surface, here's where tailings go. Those are studies that anyone can do. And that's what we're doing in the background. So we advance those simultaneously while growing the system, and that package will be ready roughly when we complete another 100,000 meters of drilling. All the baseline work will be at a point where it's saleable, if that's what we want to do, or we build, and I don't know what the answer is. I think if on that conversation, if it was today, if we were ready to go today, I think every junior should be a seller today. Cost of capital is too high. Okay, it's too high with interest rates and inflation and everything else. But I don't know, in 2026, I don't know what it's going to be. Maybe it'll be better to build. We'll do whatever maximizes shareholder value. And I will, last point, I mean, we sold for $2 billion. The price of gold was significantly lower than it is today. More importantly, the margins were significantly worse for producers than they are today. So that 2 billion is worth more today, whatever that might be, I don't know. And if we continue to be bullish with commodity prices, if and when we're ready to sell, we should get much higher than $2 billion if things evolve like we think are going to do with this project.
So more drilling, a lot more drilling, a year of drilling nonstop, 100,000 meters. That sounds like you might need to get like 8 rigs on this project.
Yeah, so we're for sure going to go to 6, or we're going to start. The goal is to ramp up in 2025 to 6 to 7. So by March at the latest, we'll be at 7. And that will be 4 or 5 at Apollo, 1 or 2 at Trap, and 1 floating trying new things, because we think we can add value by making another discovery somewhere else, just not blow our brains out trying to do it because we don't need it, right? But yeah, that's right. I mean, that's the number. To go to 10 rigs, I've been to, I think, 12 at my peak in my career. That's a big step in terms of the size of the company, number of employees, etc. I'm not ready to make that jump yet. The valuations are too low to take on that dilution at this point. Let's be patient for that. That will come, but we're not there today.
Very good. Thank you, Ari. This is a great conversation. I really appreciate it. And let's speak again when you get those assays that you're talking about. Cheers.
Thanks for the time. Awesome.